Now, I want to talk about where do these setups form? Where do setups form? Okay, think about that for a minute. When you're looking for this idea that I'm sharing, the fair value gap, where would you expect them to appear in price? Obviously, I've been teaching you the run above an old high or relative equal highs. And if you're bearish, that would set up a scenario where the market goes up, sweeps the highs, breaks back down below the highs, short-term lows taken out with displacement, and then you go back through that displacement leg looking for a fair value gap to short into. That's pretty simple logic, isn't it? Well, visually, I want you to understand it. Okay, so that way, in your mind, I do this exercise all the time with my students. Can you draw out with a diagram, what would it look like? Well, you have obviously a level of relative equal highs, and we're just going to use that green line as an example of that. And price is moving towards it. Small little correction or so, and it runs towards it again. And then finally it runs through those relative equal highs. Okay? At that moment, as soon as it goes above it, you start panning back through all of this price run in here and find the nearest short-term low. Because that right there is going to be your trigger. It's not that it goes above this old relative equal high and then goes down below that. That's not it, folks. That's not it. You have to see it go below that in displacement with an energetic move, take out a short-term low. That's how you filter out these trades that may not be high probability. So that area right there, as soon as you run above the relative equal highs, in your mind, you're looking for where's the trigger. Because until it takes out that short-term low, there's nothing going on. There's no trade there. There's no setup there. Then when there's displacement, that displacement leg in price action, that right there is your foundation to the setup. That's it. Once you have that, then you can go into that area and look for the fair value gap. That's the logic. That's the pattern. That's what you're looking for. This is if it's bearish. Now, I'm going to teach you another approach. If you have an old fair value gap above you, okay, so you have an old fair value gap and the market's below it and it's trading up and you're bearish, but you think it's going to go up to that fair value gap. The same logic when it trades up to the relative equal highs. Once it trades into that fair value gap, it doesn't have to completely close it. If it trades up into it, anywhere between here and here is good. Okay. If it trades above it, you can really make it simple and say, okay, the low of the fair value gap, treat that like the same logic that you use for the relative equal highs. Doesn't that make it simple and easy? That way you don't have to worry about how hard do I need to know? You don't need to know that because you're waiting for something to happen. What is that? Once it takes out the low of the fair value gap and trades in there, you go back through that leg and see, okay, here's what? There's that trigger. That's that shift in the market structure you're waiting for. Then you have the displacement leg. So once you have that, you can go back in and look for the fair value gap. Okay, so that's the two entry strategies for this model. There's no other way of worrying about what does it look like this now. Visually, this is what you're doing. Okay, it's simple. And if it feels like it's not simple, go back and look at old moves. It's algorithmic. It repeats. If you can't stick to the rules, this game has a funny way of taking you right out of it. The people that are consistently profitable, it's not by luck, and they're not stupid. They have a logic they adhere to. They have rules that they trade with, and they have to stick to them. When they deviate from them or do something outside of what that rule-based strategy is, then it's reasonable to expect ruin or loss. And those moments are most painful because you can look back and say, this is not what I should have done. You're going to have losing trades, folks. Okay? In your journal right now, today, with today's date, make a promise to yourself. Write it out. I promise that as long as I'm doing this, I'm going to endure losses. Notice I said endure. You're not going to be defeated by those losses. You're just going to have to endure them. Because trading is all about managing losing trades. You got to trade your way out of a losing trade every single time you get into the market. Every single trade. As soon as you start off, you're under the commission. You're under the spread in Forex. You got to come out of that. Every trader is a losing trader that finds success out of loss or suffers ruin in it. That's it. That's the only two things that can happen.